I've never in my life got an eviction. Having to tell my children that we have to move out and we're going to live out of a van.
Words cannot explain the harsh reality faced by hundreds of thousands of Americans today. As rent prices keep ascending to an unimaginable extent and evictions cause families to leave their homes, several American individuals and families are undoubtedly spiraling into financial ruin. Eviction cases in the US have increased by over 80%, according to recent data. Since October 2022, official agencies have reported that roughly 13% of Americans, or more than 40 million people, face the possibility of losing their houses this year. Corporate landlords are evicting tenants from homes at rates that significantly outpace the standard rate prior to the pandemic, which of course is outrageous, but judging by the situation, we just cannot point fingers at this point. In recent research, the Princeton University Eviction Lab discovered that nearly 970,000 eviction cases were submitted by landlords in these locations each month, a staggering 79% rise from the previous year. It's scary to witness this eviction plague. Arizona Judge Anna Huberman claims that the court receives not just a couple hundred, but 1,000 eviction applications each year. The most recent wave of evictions is affecting both urban and rural areas equally and is putting millions of American families with children in danger of going without a home. Take Phoenix, where rent prices increased by over 25% year over year and the median monthly asking rent reached $2,261. In Maricopa County alone, evictions are at their highest levels since at least 2016, with over 45,000 filings so far this year. Evictions will continue to be a concern as housing costs rise. Michael Figgins, the executive director of Legal Aid Services of Oklahoma, and this is in Oklahoma, the heartland, so to speak, and one medical expense, one car repair may swiftly push someone towards an eviction. It's pervasive here, just as it is in areas where people tend to believe that this is where the activities take place, but they also occur here. Andrea Palumbo, a housing attorney for Minnesota Homeline, noted that in Minneapolis, where rent increases have been printed below the national average, evictions in December were 37 above historical averages after skyrocketing in June when the state lifted its eviction moratorium. She said, "I hear a lot of people saying that they just need a little more time. I'm going to find a new job, my husband or wife is going back to work, and we're going to get back where we just need a little more time." But all of those reasons just sounds like people's means of trying to buy more time. More than 45,000 eviction cases were considered by the Las Vegas Justice Court. This is not just a problem isolated to major urban centers, but also to rural and industrial communities. For example, in Clay County, a working-class community just across the state line from Fargo, North Dakota, the average was closer to 30,000 cases in earlier years. "It's going to be a very, very difficult time from now on," stated Tim Thomas, who is the project's director of research at the University of California, Berkeley. The general state of the economy is still deteriorating, and nationwide rents are still $800 more costly than they were in 2019. Prior to the pandemic, the typical rent in the United States was $1,062. As of right now, it's $1,090.37. A few months ago, investment giant Blackstone filed thousands of eviction cases against its tenants in Georgia and Florida, demonstrating how corporate landlords are using evictions as a strategy to increase their profits. Blackstone's eviction files have dramatically increased after July 2022, according to a story in the Financial Times. Jim Baker, the executive director of the private equity stakeholder project, stated in an interview that Blackstone owns more than $326 million worth of real estate across the nation, about 1/5 of which is tied up in an investment vehicle known as the Blackstone Real Estate Investment Trust, or BREIT. The firm's recent move to a fake tenant endangers housing stability for families in the US and around the world. Rental properties make up more than half of its $69 billion worth of portfolio, and 97 of those holdings are in the United States. The company expressed confidence that the evictions would contribute to future cash flow growth. According to the Housing and Urban Affairs Committee, the number of homeless people in the United States increased by 17% just last year. Ohio Senator Sherrod Brown remarked that millions of families are completely priced out of the housing market. Due to rising rent, residents are only one illness or job loss away from being evicted. More and more speculators are purchasing single-family houses, which are often purchased by first-time homebuyers, and renting them out at exorbitant prices. In addition, 28% of the residences sold at the start of this year were to investors, according to Brown. The median rent in the United States has increased significantly since the turn of the century in all U.S. regions, according to Matthew Desmond, a sociology professor at Princeton University and the director of the Eviction Lab. The increase in rent was 120% in the Midwest, 135% in the South, 189% in the Northeast, and 192% in the West. Despite certain areas experiencing price increases of 40%, such as Portland, Oregon, he claimed that last year saw rent increases that were the fastest on record. In Newark, New Jersey, 35%, when the cost of housing increases by 15%, 25%, or 30% in Orlando, Florida, and by 29% in Cincinnati, Ohio. What can families do? Desmond inquired. Since they are frequently already residing in the least expensive homes accessible, they are only able to reduce their spending on other essentials like healthcare, educational opportunities, and food. When home ownership possibilities are removed from local people, local communities that are out of reach can suffer a severe impact, according to Laura Brunner, CEO and president of the Porter's Greater Cincinnati Development Authority. Brunner also added that institutional investors have a far broader footprint than they actually seem to report. This might eventually mean that institutional investors hold 50% of all homes nationwide. However, these investors are not planning to develop any new homes. Instead, they just intend to continue converting homeowner units into rental properties and raising rents. Brenner warned that the housing market in the US is a multi-billion-dollar industry, with 40 million people still at risk of losing their homes. A small number of billionaire landlords amassing $24.4 billion in profit in 2022, and by the start of the summer, 3.8 million tenants possibly losing access to a basic aspect of human life. Can it get any sadder than this? The enjoyment of other civil and political rights under our system is significantly impacted so much by the absence of a guarantee of home stability. Housing insecurity affects people's health and their well-being too, as well as their capacity to work and develop equality, maintain a healthy financial situation, and participate in our democratic system. America cannot afford to wait until there is a new, serious national emergency before acting, and it's about time some serious measures are taken. What are your opinions on this? Feel free to let us know in the comment section down below. If you enjoyed today's video, make sure you smash that like button, subscribe to our channel, and click on the tiny bell icon on the side to stay notified and updated on all of our upcoming content. Thanks for watching. We'll see you in the next one.